Hey everyone, welcome back. It's Friday, Finance Fridays, and thank you for tuning in for another episode. On this episode, we're going to talk about some of the risks and trends that we see happening in the current mortgage and real estate marketplace. Continuing with our financial literacy and education theme, we want to take you inside and talk a little bit more about what we see happening. Let's go. As the fall market takes full swing, understanding some of the push and pull factors that are coming from our political, our marketplace, our economy, there are many things that are to be considered when going out there to purchase a home, especially when you need a mortgage or you're looking at real estate. These items tend to go hand in hand, and there's many external factors that play into how things are going to unravel in the near future. So, looking at the fall market and looking into 2022, I wanted to compile a list of some of the things that we're seeing that are push and pull factors, that we call them risks and trends that are happening in the marketplace right now. Now, first and foremost, with the new government and the new promises when it comes to housing affordability, this is something that's going to be important for many Canadians and they should be paying attention to, especially if you're looking to buy or if you're an existing homeowner, when these programs are going to be launched, how they're going to launch them, and if it's applicable to you. And in these videos, basically the educational component, the financial literacy part of our Finance Fridays are going to be coming to you with this information and how we can help you. But we're getting a lot of questions about things that are happening externally, and one of those things is inflation. So inflation is definitely something that you want to pay attention to. Is it transitory? Is it something that's going to be here for a little bit longer? When we look at some of the statistics and the data, we're starting to see inflation creep up well above the Bank of Canada's trajectory of 2%. As of July, it's at 3.7%, and as of September, the CPI index, which is the Consumer Pricing Index, has shot up over 4.1%. Now, that is something that you have to understand. It just basically indicates that things are going to be getting more expensive. For most of you watching this video, you'll actually understand that because you're going out to the grocery store buying everyday items, and things are going to get more expensive, and that translates into real estate as well as materials and labor shortages are going to be more expensive. Things are going to be expensive to build, so therefore home prices generally are going to be more expensive, especially if you're planning to do a renovation. Now, when you're taking that into consideration, you have to understand that when inflation goes up, there are some indicators in the mortgage marketplace as well. Now, the leading indicator for that, not the only indicator, is the 5-year fixed bond yield. Now, generally, when bond rates go up, interest rates tend to go up with it, and especially if you're looking at a fixed rate mortgage. If you're currently in a fixed rate mortgage, that's great. If you're in a variable rate mortgage, that's a place that you want to be right now. And that ties into the video I did last week in regards to 3 reasons why you may want to stay variable. So inflation is one of those items that you do want to keep an eye on. The next trend is basically, and something that we've been talking about extensively, is migration patterns of where Canadians are buying, especially in Ontario. We're starting to see more and more clients move outside the GTA, outside the 905 and the 416, into the suburbs, basically looking to get more value for their dollar, where they're able to buy that townhouse or that semi or that detached house for the same price that they would be able to buy a smaller home maybe in the 416 or 905. So migration patterns basically indicate that home prices outside of the GTA are probably most likely going to continue to rise as they have been. And I believe across Canada right now, we're at 30 to 35% appreciation across the board. And we're seeing that in areas even as far as North Bay and Bancroft, where we've seen appreciations as high as 64% over the last year and a half, or a year and 19 months. So that's just an indicator, say, if you're looking to move, and also if you're looking to sell and buy a home, a lot of people are actually doing that right now, where they're saying, okay, we're going to sell our home in this area and go move further north because we can get more home, or put some money in our pocket as we have an aging population. So that brings me into the next point is, with inflation and with trends being where they are right now, is consumer confidence. And consumer confidence is something that we've seen in the news a little bit. And basically what we want to point is, with all the news of potentially another lockdown, a new variant strain, what stranglehold is that going to put on the economy? and what's that going to do to the markets in regards to how long would we be shut down for? So consumer confidence is a little bit lower. It's actually the lowest it has been since the beginning of the pandemic, and we've gone up and down, and it has moved, over the last 19 months. So that is something that you do want to pay attention to, because if you're listening to consumer confidence, the goal is you're either going to be on one side of the fence or the other and making that decision to pull the trigger. And what we saw in early 2020 is a lot of people held off. And then as soon as things started to normalize a little bit, or they started to basically go through with their agendas to buy or sell, the market picked up and there was a huge influx of buyers. So not saying to time the market, because you can never time the market. It's time in the market that we always say, but it can help you make a decision, maybe looking to buy in the colder months, for example. That might be a decision you want to make, obviously depending on your financial situation, and having a conversation with your mortgage broker. Now, when we talk about what's happening with the Bank of Canada in regards to unemployment and regards to stimulus and government providing aid, that is something that we're going to continuously see for a little while now. Although Tiff Macklem from the Bank of Canada has come out and basically laid out a roadmap for 2022 on when they project to increase the interest rates, that is going to be something that is very touch and go, because as of right now, there's 1.7 million Canadians that are still collecting some form of subsidy or are not working, and that is actually much higher than the 2008 financial crisis, which was around 800,000. So the government is still going to need to get the labor force back to work, as well as tackle the 2% inflation target, as well as look at what's going to happen if we're locked down and pushing out those agendas. So all these things taken into consideration are components of risks and trends that you want to pay attention to. Now, if you're looking to understand a little bit more about what is happening when we talk about wealth inequality or the wealth gap, this is something that's also very important, because in my opinion, we're going to be seeing the largest wealth transfer in history about to go down in the next 10 to 15 years as baby boomers retire, downsize, pass away. The inheritance, all that money is going to be going to the next generation. And we're starting to see that trickle into the markets as of right now. We've seen this as parents are able to help their children with larger down payments to get them into their homes, as well as buying more luxurious homes, maybe moving parents into that home with the kids, because they don't want to put them potentially in nursing homes due to the lackluster performance that's been there. Obviously, it's all case by case example, but we're talking about things that we're seeing, trends and risks that we're seeing in the marketplace. So that is pushing the luxury market up a little bit more, as well as larger homes. So that is something to really take into consideration. The wealth gap is something that we see as a potential factor to increase home prices, as more and more people are going to be able to afford, in certain circumstances, not everyone, larger homes, driving up prices depending on the GTA and the 416 area code. And the last important note is housing affordability, as this was one of the key components to the election that happened, and how these plans are going to be unraveled, and how they're going to introduce these plans, or when they're going to introduce these plans, will be something yet to be determined. And that is the goal of these videos, is to provide the financial education and the literacy to understand, what components, what programs may or may not help you. And that's why having a conversation with your mortgage broker or your mortgage professional will help you understand exactly how these programs will work, if they're actually designed for you, and if you can take advantage of them. So I hope you found this video helpful. Here at In Touch Mortgage Solution, our goal is to educate and help our clients get into their dream home and achieve the financing goals that they desire. So if you have any questions, please feel free to reach out to our team at any time. We're always here to help. It's Friday. I hope everyone has a great Friday and a great weekend ahead, and thank you for tuning in.